Good morning, everybody. This is Dee Dee with Power Through Trading. I'm not here just to teach you the strat, but to teach you how to execute from the strat techniques. If you have any questions regarding the strat, please reach out to my guy, Rob Smith at Smiths in the Black channel, Rob in the Black at Twitter, or at cpagroup.com. Hey, it's Monday. I hope everybody had a fantastic weekend. You had an opportunity to relax, enjoy friends and family, or if you're an introvert, you were able to just enjoy, recoup, re-energize, and get ready for this next week. The market is gapping up, guys. Let's look at the broader market. And no, I do not trade Bitcoin. Let's see, but I do watch it because I do trade coin, and Coinbase is was gapping down earlier today. So here's what I want to talk about. The market is gapping up this morning, but we had some real nice moves last week. So we're really looking to see if we're going to get a 2-2 continuation on the weekly. My 2-day and 3-day charts, candles flipped today, right? The 27th, you see 2 and 3-day candles flip. And so what we saw was some nice moves, gappers, right? At the end of the week last week. And so here's what you see on the Qs. We had 2 down, 2 up. Now the question is, does it price action continue to trade up? We had this gapper here. All right, so I'm just gonna put this on a daily. So we had this gapper here, right? So June 10th. It looks like it wants to take this at the open 294.87. So it made it actually gapped above, traded above this gapper here on Friday. So does it continue? We drew these broadening formations from a while back. This trend line here is just this inside bar. So where are we in pre-market? We are right at the low of our inside bar here. So the low is 296.57 and pre-market it's at 296.66. So what does that mean for us today? Not exactly clear. It's Monday. So what we know is price has to trade above this range, right? So let's just start there. Price has to trade above yesterday's high. I'm sorry, Friday's high. All right. And then we're looking for it to take this gap, which is 299.23. So we're going to make this area here. And I'm going to take that down. It's coming back in. So we'll do this at this inside bar. So since it's coming back into this range, we're going to draw this trend line down. And what we're looking for is, because this is the low of this range, what we're looking to see is if price will continue. If it trades above this level here, it's about 297.50, then maybe it continues back inside this range and take this inside bar here. We have an inside bar here at about 302.26 and then here at 305.76. Okay, so that's where I would look for if you're trading the Qs. I would look at if price trades above 297.50 to look for a target of 302.20 and then 305.70 to see if it takes out those levels, okay? On the daily. Let's look at the SPY. And then we'll chart a couple things. So again, we drew our broadening formations off of our either our 3-day or our monthly. And you can see here, CCI is trending up nicely on the daily. It looked like it wants to take this gap and see the low here, 389.75. So it closed. Yeah, it closed the gap here on Friday. All right, so you can see that green line right there. So it closed a gap. Let's see if it's going to hold, but think about it. We had a 3, 2, 2 continuation. So does the market gap up in reverse? I don't know. But let's see where price could land if it continues. So I drew this broadening formation. So we know we're inside this gapper here. So that was on June 10th. Trending back inside there, closed it on Friday. So I drew this broadening formation from the high of this range, right? High here, to the high of this outside bar. And so what I'm thinking here is as price trades back inside this range, because it closed inside here on Friday, price trades back inside this range, this will be the upper broadening formation for this range, right? So what we're looking for is if price breaks above this, then looking for it to take this area out here. But it's got to clear this level first, right? So again, trades above this high, which is 390.09, trades above Friday's high, holds here, breaks this level. So this will be our first target at 394.90, call it, yeah, 395. What's the high here? 395.78. Let's say it trades above Friday's high, 395 as our target. It breaks above, trades above that and continues. Now you have another 2-up bar here before it catches this close here. Yeah. So I'll just do this. And then we'll get to charting some other stocks. All right. So this will be my first target. Again, right now, I mean, we still have an hour, well, there's almost 2 hours before the market opens. So anything can happen. But let's say it gaps up and trades to this level here in reverse, right? We'll use our CCI to help us with our entry on the reversal there. But if it continues, this will be our next target, right around 400. And then, of course, if it continues, you have this broadening formation we drew a while back. This high was 408.57. Okay. All right, let's look. So I look at the stock screener, not much on my list, right? Market is quiet. So when I talk about our rules for success, we're looking at how we're going to plan our day. We create our short list, looking to see if there's any market news. I oftentimes will read Bloomberg. Don't see a lot going on there. Central banks around the world are trying to fight inflation. So not a lot going on. Oil prices are falling. Nothing on the economic front. So first thing I'm looking at is, hey, what's going on in the news, broader markets? Anything exciting? Not so much. Slight rise in the futures, but again, it's still very early in the morning, so we don't know what's going to happen as it gets closer to our market open. So now let's look at what stocks we want to, I'm considering. So let's go back here. So what I saw of my list, and I have a list, Tesla's gapping up, guys. And again, my stocks, I like for liquidity in my stock. So volume, my stock looks, volume 5 million. So that eliminated a lot of stocks from my screener. And then on pre-market, I like for them to be gapping plus or minus 2%. And the reason for that is I'm looking for stocks at the open. I still have other stocks on my list, but I'm looking for things that like to trade at the open, and there's just not anything there. All right, so the Tesla is gapping up, guys. You can see that here. And 2 up on the week, certainly trading up on the 2 week, 3 week, and it's still inside month. Remember, this is the last week of the month and the last week of the quarter. So Tesla is back inside the previous quarter and certainly may turn, let's see, the opening was 755.16. It could turn the month green today. So we're going to keep our eye on that. Coinbase is gapping down. Yeah, it really will depend on the broader market to see if this thing is going to go lower. I'd use caution if it's trading, because full time frame continuity is to the downside. Well, in the month and the quarter, we'll see what happens on the week. Because remember today, so if you look at time frame continuity, month, quarter, year is down, but today and starts a new day and week. So I have to keep an eye on that. Netflix, I put on the list. I kind of like this formation here on the 3-day, right? So I'm looking for Netflix. So this is one we'll chart to trade back to this level 207. So we'll see what happens if, and you can see the weekly here. We'll see what happens, but just keep in mind, guys, we're at the end of the month. So, but I will chart this today because we have a nice move here. We're coming back inside this range. If it holds this gap, then I'll look for Netflix to go higher. Square, again, if it holds this gap, I like this 222 on this 3-day. So remember, this is the 3-day time frame I'm looking at, guys. So it doesn't necessarily mean it's going to take it today, but when I look at the broader market for the week, you know, if we didn't have volatility the way we have, I would probably do this in my margin account, swing it using spread options, but I'm just not going to do it at the end of the month. Airbnb, we had an inside 3-day. This was very tight range. If we can get some movement here, because it's got to clear the high of 105.33, maybe we can get this to close this gap. So we'll add it to the list. Obviously, I won't be trading all of the charting all of this on video because it just takes too long. But I just want to show you here what I'm looking at for today. NVIDIA, 3.2. Potential 322 continuation here. Again, 2 up on the week. I like my the chips. I like the chips this week. We'll see what happens. But again, you have these gappers that it's got to try to close. So we'll see what happens. And Amazon. So since this split, Amazon has traded down, but it reversed nicely last week. And so I missed my opportunity. I actually did want to buy this in my retirement account, but I didn't. I missed the entry here. Once this traded back up on my 3-day, I actually missed my entry. I wanted to get in right around 105, but I didn't do it. So I'm gonna keep my eye on it. But again, if you look at this on a daily, you're up 5 days in a row here, right? 2 up, 2 up, 2 up, 2 up, 2 up. So not sure how the broader market is going to go. But these are the stocks I am watching all week because I like the 3-day setups if we're going to go long, right? If the market will continue to go long. So again, Tesla, Coin, Netflix, Square, Airbnb, NVIDIA, and Amazon. For today, we're going to do NVIDIA. Let's chart it. This is gapping up, guys. We're going to start charting using our 90-minute as we normally would do. And we'll start with the day, the prior day. So we had price close 2 up at the high of the day. So we're going to take the high of this day and we're going to look for the next highest candle inside this range. Let's see, preferably a 2 down or an outside bar. And so this is 71.40. 171.11. Did I get that? 171.40. All right, perfect. So what we know is if price trades above this range, we'll look to go long. Okay, because we want to stay outside this day. This is a 2-up day. And you can see this. This was a 2-up, 2 down, 2 down, 2 up. It's already taken out this range, looking to take out this range. And you can see where it's trading inside this bar. So because it is inside this range, we know it needs to stay above here for us to continue to go long. We have this 2-up bar here. So I'm going to take the high of this 2-up bar, and we're going to draw our broadening formation back. So that's 172.50 to the next highest bar inside this range, 172.69, 171. And 71.11. Yeah, I think it's the same spot. I think it's the same spot. So back to that outside bar. So here's what we know. And you can see actually where it is trading at pre-market. So it's got to hold that level to continue. So if it's going to be a kicker, guys, this is what you want to think about. These ranges, we draw them for a reason. This is to help us trade the open and reversals throughout the day. So we know it has to trade. We want it to trade above this range for it to go higher, because this is a 2-up on the daily. So two continuation. Here, it's inside this range for a continuation. So let's say it goes to continuation here and hit this broadening formation. There is a potential for price to just trade inside this range before it continues to break to the upside. That doesn't mean we reverse here, right? We're not going to look for a reversal until it's clearly back inside this range. Remember, this is a 2-up candle, which means it's got to trade below this level for potential reversal to the downside. You got a 2-up, inside bar, 2 up, 2 up. So it's got to take, so 2, 1, 2, it's got to trade below here before I'm looking for a reversal. Now, CCI will help me with that because it starts to trend down. Because remember, looking at this CCI and this 90, guys, this is likely going to be above, because it is already, it's going to be above plus 100 and a 90. When you have your longer time frames trading above plus 100, your reversals get very choppy. So just think about that. When you're plus 100 on the 60 and the 90, or even the 4-hour, reversals can be very choppy, trying to come back down inside those ranges. And so it's probably gonna, it may do it, but it's probably gonna be a lot of sub-triangles, because you're trading back inside those ranges after momentum had shifted. Even though you may be in full time frame continuity, momentum had shifted. All right, so just keep that in mind. All right, so that's going to be our first target above this range. This will be our first target. It's already there. Now, if it's going to continue, we're just going to track this up. So here's our 2-up bar on the 90. We have an outside bar, 2, 2 here. So we'll say if price is going to continue to go higher, so once it crosses this range, then this will be our next target. Okay, so if it trades above 174, it's close to that range now, then we'll look for 177. All right, then you have this gapper here. So I'm just going to go the low of this gapper, and I'm going to take this to the high of this outside bar, because you're inside this range. So we're basically taking this down and saying before it can continue inside this range, it's got to take this gap. But you got this big 2-up bar here. So I'm going to trade this 2 down. I'm going to draw this 2 down to this 2-up bar here. It's got to take this range. So this will be our next target. Okay, so long above yesterday's high, target, target, target. It could do a lot of sub tries, right, on a shorter time frame inside these ranges. So just be careful and then use your CCI on the shorter time frames. If it hits this range and starts to come back down, we can always get back in. On the short side, you have a 2 up inside bar. I'm going to take this inside bar here and I'm going to draw my broadening formation, because I know for it to trade lower, it's got to trade, it's got to take this area here, right? This is where I don't want to be trading. Inside, inside, inside. We didn't want to trade it on Friday, so why would we want to trade it on Monday? It's still inside, inside, okay? So this is the area we want to avoid. And so to draw those broadening formations, we're going to take the low of this inside bar, 167.68, to the next lowest bar or highest bar inside this range. But the next highest bar, let's say this would be lower. I have an outside bar here. Do we have a lower bar inside this range? I mean, a higher bar inside this range. There's a 2 down bar here. So that puts me above my outside bar here. So this is 167.68. This is 168.64. This outside bar is 168.14. So I'm going to draw it to this outside bar. Why? Because I like to draw to and from outside bars. And it's actually the next lowest bar, or I'm sorry, next highest bar inside this range. So I'm going to draw it to this outside bar here, okay? So here's my thought on the short side. Now, again, I want to avoid getting stuck inside this range, but if price trades back below this range at the open, then I want to go short. So if price trades back below this range here at the open, I want to go short, but I need CCI to support that, meaning it needs to be below 100 on the 90. That gives me an indication that this upward momentum is over and things are starting to probably dry up or getting a little choppy back to the downside. Because again, month, quarter, year is down. All right, so want to be careful with that. And then I want to draw another broadening formation from the low of this bar here, because this will cover our day. And remember, it's now, it will be inside this range here. So we want to draw this to the next highest bar inside this range, which I believe is here. So let's see, 163.10, 163.20. All right, so this will be if price, so short here, I'm looking for a short in here. This will be my first target if it takes this 2 down. So what you can see here is I'm not waiting for the day to go 2 down. Right? So this is all one day. I'm actually shorting inside this day only because I have this 2 inside bar on the 90. And so my thought here is we can catch this on a 2 an inside bar here off this inside bar, even though it's a new day. Maybe we can get in early on this if price trades back into full-time continuity. So I'm not going to take it right after it trades 2 down here on the daily, which is why I draw these what I call broadening formation pivots intraday. All right, so I'm not looking at on the daily. I'm looking to get in before it goes 2 down on the day. So we'll see what happens here. And then once it goes 2 down on this daily, now, right, you got to take this area out here. You have this 2 up bar here. It's got to take this before it goes inside to get this 2 down bar here. And that's where I start just drawing those broadening formations. It's got a 2 up bar here. It's got to take that 2 down. And I want to take that to the next highest bar in that range. So 161.20. The next low here is 161.46. So that works. And then you have this inside bar here. We'll take it to that outside bar, the next lowest bar inside, low, high, it depends on how you view it, but it's the low is 159.43. It has to be inside this range. And so 159.50 is higher than 159.43. So that's inside this range. So we got that, and then you have the low of the day. And we'll take that to the next low inside that range. So this is 158.53, 160, 160, 160. We'll take it to this outside bar here. Aha, 159.70. Well, there you go. All right, so that's how I draw those. And the reason, again, let's go back. These are simply broad information pivots on the 90 that helps us determine when price is hitting exhaustion after a move. We do it on the 90-minute range because I like the 90-minute flip. If everything reversed right on a 15-minute interval, we'd all be very wealthy because it will be easy to see. But unfortunately, that's not the way the market works. And the market knows it. But what it does programmably is it hit previous highs and lows, right? So that's why you hear people talk about so broad information, a series of highs, excuse me, higher highs and lower lows. Mathematically, it is calculating these points. I just simply draw them based on the 90-minute time frame, and pretty accurately, I must say. So when it hits these levels, you can see, especially if you're trading options, guys. If you're trading common, you can get away with holding a bit longer. But when you're trading options, these levels become very important because they'll hit and they'll hit and reverse. Maybe continuation, they reverse on a shorter time frame, only to continue on the longer time frame. But we use it as an opportunity to take profits. All right, so let's just write it up and we'll close for today. All right, so we're gonna go long. Let's start since we're on the bottom. We're gonna go short below this level here. So let's call it 167. 167.50. All right, with CCI below 0 and or preferably, I'll do it like this, negative 100 on 18-minute. Here's why I said preferably below 0, guys. What I found is when CCI is still trading above 0 on 18-minute, it's probably TTOing. But once it crosses below 0 and below one of our trend lines, the likelihood, because again, we're wanting to get these reversals at the top of these ranges, the likelihood of it going below negative 100 on 18 is greater. But when you're coming back inside these ranges like this off gappers, we don't want to wait until it gets below negative 100, right? But certainly when it crosses 0, I'm interested. Okay. Now, continuation, it absolutely has to be, because remember, this is a 2 up. So until continuation, it absolutely has to be above plus 100. So long continuation, what do we call it? 2-2 continuation. 2 up continuation above the high, right? So above Friday's high, 171.40, with CCI above plus 100. Now, what does that mean when I say crossing 0? Because remember, so we have to think about where we are. We're planning our day. things could change. Things could change as the market condition changes throughout the day, right? This is the open, first 60, 90 minutes, because that's where I typically make my money. So when the market opens, this is what I want to do. I want to go long on a 2-2 continuation if price trades above this range. So I'm going to wait for my signal, right, on the shorter time frame. So if you're 3, 5, 6, whichever shorter time frame you use, and I'm looking for that inside bar, that 2-2 continuation. So again, crosses above here. Let me just see if we can show that here. So let's just say for grins, this was our chart here, and this is our line. So this is the open on Friday, guys. I'm waiting for my inside bar or my 2-2 continuation, right? That's what I mean by actionable signal. So if this was Friday and this was our line, we said we're wanting to go long above this range. So this was the previous day high. So June 23rd high, we know we want to go long. Now I'm waiting for a signal on the shorter time frame. With me? CCI has to be above 100 on a 2-2 continuation to the upside, because it was 2 up. So now it has to, well, actually, no, this was not, this was a 2 down. Oh no, sorry, this is, we haven't started today. This is a 2 up. So we know we want price. Yeah, I'm sorry, I'm looking at the wrong camera. This was a 2 down, but we want 2-2. So this is a 2 down, 2 up reversal on the daily. So we want CCI to be above 100. This was a reversal. If this was a 2 down continuation, it has to be below -100 on the 18. But in this case, this was a reversal. So we went 2 down, 2 up on the daily. Let's just flip this back to the daily so you can see that. Let's see what I'm talking about. So we went 2 down, 2 up on this day. So we want, so if this had been Friday, we would have said, if price trades above this range, we'll look to go higher. So that's all I'm saying today is price trades above this range, we're looking to go higher. And then we're waiting for our signal on the shorter time frame. So this is where I generally wait for the 18-minute close. Here is the 18-minute flip right here. I'm looking at my CCI. I have an inside bar, an outside bar. CCI is still good here, well above plus 100 on the 18-minute, and I have this hammer, or at top of the range, you could call it a hanging man. So I'm probably gonna take this trade at the high of this range. So I have my inside bar, my outside bar. So this is a TTO. An outside bar is in and of itself a broadening formation. Now you have to think about whether or not you want to exit. Here would be that move, a potential reversal back to the downside on the shorter time frame. Here's what I'm looking at. So if you're going to take this trade and you enter off this inside bar at the 18-minute flip, right, which is right here, you go long here, price trades up, comes back inside this range. If it were DD, yeah, I'm exiting. I don't like it. It's tricky. But if you look at the CCI, you could hold here and say, no, Didi, I'm going to take my stop because this is the broadening formation for this range. And you can say, I'm going to hold this until and see if it takes the open. If you have a small account, you have to be careful because you don't have a lot of trades, right? You don't have the leverage. I'm going to exit here on this. And as soon as this crosses back up above this range, right? Because remember, this is all it did was TTO'd. But here was your high. I'm going to just draw this so it's easy to see. Here's your high of this 18-minute candle. So it came back in, but it didn't hold, right? I mean, it didn't take this, reverse this 18-minute down. So as soon as it went 2, 2, so if you had taken it here on the 18-minute, which I probably would have done, I would have taken the high here, I'd have got TTO, I would have exited as soon as it came back inside this range. And then as soon as I saw this, and you can see this, and the reason I'm exiting is because I don't like the CCI crossing, but look at what it did get right at the top of the hour. All it did was TTO, 30-minute flip, it went straight up, I'm back into this position. So this is where, as you start to really understand your broadening formations on these, so we drew it for the day, we knew we were good, you know, we didn't draw this for this day. Let me just remove these. But this is what I mean by setting up your day, waiting for a TTO on the shorter time frame. Preferably, I prefer the 2 2s. Look how clearly you can see that. And then you can do something like this and say, okay, if it crosses back up, I'm good, man. And then you can increase risk because you can, your quantity, because you feel pretty confident. This is your opening 60, guys. This is your opening 60. This is still good. 30-minute flip, bam, 2-2 continuation on the 30. Starts to trade back in, take your profit, and you're done. But that's how I trade. Is I start out with here. I have a direction. I have a plan. I'm looking at my charts here and I'm like, you know what? I want to go long. If this fails, because I don't know, then I have a plan. Yeah, I don't like this. I'm just going to get out. I'm okay with that. But had I gotten out right here on this 2-2, you know what? I wouldn't have lost money. I would have taken a small profit. Why? Because I got in over here. I would have taken a small profit. And as soon as that came back down, I'm back in. All right. So that's how you want to think about trading this open. And then once you get here, as long as price stays above your ranges, you can hold these. You can hold these. You don't have to exit. But as soon as I see, this is my 90-minute flip. As soon as I see price flipping on the 60 or the 90, yeah, I'm like, yeah, I got to get out of this. This comes, so it's 2 down. Yeah, I don't like this. I don't like this. I'm done with this trade. And then you can see you're just inside. You do not want to be in here inside 90. Okay. All right. So I'm going to wrap up there with my scripture, Proverbs 21:5, plans of diligent lead surely to advantage, but everyone who is hasty comes surely to poverty. Again, we are waiting for our TTOs, whether you use the 3, the 5, the 6. I mean, if that's too, if that is too fast for you, you can use the 10. I mean, there are different time frames that you can use. This is what's so wonderful about trading this market. Every one of us have abilities. Every one of us have abilities. You just have to decide how your brain functions, how quickly you can maneuver, right, between your charting software or in your brokerage. They could be one of the same, but how quickly can you maneuver to get in and out of trades based on those actionable signals? And so if you're trying to trade the open, my preference would be on a shorter time frame. I like multiples of 3. So my preference would be on a shorter time frame, right? And this is where I'm looking at this, you know, I'd be getting in at the 18-minute flip, right? right here, comes back in. I may, if I'm on the 6 minute, maybe I even hold. Why? Because CCI is going to look different on longer time frames, right? It'll start to smooth out the further you go out in time. So don't be so in a rush to jump into this market. Don't be in a rush, okay? You will get your TTOs. I promise you, you will get TTOs. Can't promise you you're gonna make a butt ton of money because that's gonna be dependent on you. But I will promise you the market will triangulate out, right? It's going to give you these sub triangles, these inside bars, these 222s, these 312s, 322s. The market will do that on these shorter time frames all day long. The best time to trade is after that 15-minute flip and before the 90-minute flip. After that, guys, unless you get simultaneous breaks to the downside, where you got huge, noise in the market, headline news, that sort of thing, that first 60, 90 minutes is where you're going to make your money. If you're trading the afternoon and you're giving money back, don't trade in the afternoon. Okay, it's not working for you. All right. Thanks, everybody. I appreciate you joining me. Take care, and we will talk to you again tomorrow.